Hello traders, Gary Wagner with the Gold Forecast. It is the 27th day of October. It is Wednesday, and this is the Daily Report. Gold currently trading under significant pressure this morning. 1320, 1321, trading off about $17. On today's report, we're going to look at some of the fundamental data that's come into the market to cause the dollar to firm and thereby put significant pressure on gold. Traders, this morning we had a report that U.S. new housing sales were up about 6.6%, and that firmed the dollar up on an extreme basis. We're looking at a 60-minute gold chart. The reason that I'm bringing that up right now is because it shows you in, I think, a much greater detail this level of support right in here that absolutely needs to get held on a technical basis for this market to continue on its rise. If it does break through this level, and of course we do have a stop and our stop is just below that level, I obviously need to reevaluate what we're looking at in terms of gold finding a bottom and moving on to this fifth wave. If we take a look at our daily chart, it's an interesting pattern. It's one that I quite frankly I have never seen before. And what I am talking about is the fact that what began this potential move up was the fact that as the market came down, we had this formation that we see quite frequently, and that is that variation off the three-river morning star. The black, the star character, and then that follows, of course, with this red candle. We didn't get quite the follow-through that we absolutely needed to see. And yesterday, in its trading, what we actually saw was another doji right in here. And then when that followed today with this black candle down, what it gave us was a pattern that is known as a three-river evening star variation right in here. Quite frankly, I have never seen this kind of alternative move this quickly, meaning the doji and the doji. For that reason, I kind of feel as though this pressure is really significant pressure. It's not just a blip on the chart, so to speak. Traders, as new technical and in this case fundamental data come into the market, we have to always be sensitive enough to evaluate our stance and delineate whether our stance is absolutely proper. I can tell you this. I did not like the activity yesterday. We didn't get the kind of follow-through that I wanted to see. Obviously today, with the housing report and the effect that it's had bringing the dollar down, this kind of pressure that we see right in here is not the follow-through that is typical of a market finding a bottom. When we take a look at other instances that we have seen with this bottom activity, in most cases you do get the market finding a bottom and then moving at a fairly solid 45-degree angle up to the market. In fact, the only times that we've seen bands recently, we've had these bands, significant bands, and then a break to the downside rather than to the upside. For that reason, my belief is that we have our stop in place. I need to see the market firm over the next day. If it in fact does not, my sentiment is that what we are seeing here is not bottom activity anymore. In other words, coming down here, move to the side, and it might just break again to the downside. If it does, it's going to look for the next Fibonacci level to break down to. That, of course, doesn't bode very well for gold. As you can see, I have put up the continuation in the Fibonacci levels. Of course, we have our stop here. The only thing that I would consider doing is taking the stop to the market if I thought that there was no opportunity for the market to find some sort of a base here and then move back up. So this is going to be our protective aspect. In other words, if the market does want to trade sideways for a while and then does break to the downside in terms of the levels, this is where I would look for it to go, either 1292 or 1271. Those are the logical levels for a retracement if in fact it cannot hold in this area. I believe that it's absolutely critical that the market firm today and tomorrow to believe that we have the opportunity for it to move to the upside. Because if it does not, when it trades within these tight, narrow bands, tightly defined trading ranges, we will see a break, and a sizable break in my belief. And if it doesn't break to the upside, the logical target levels are going to be these points here, these Fibonacci retracement points. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.